Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our weekly FX analysis on the week starting the 31st of January 2022. Well, last week was a good week, guys, for anyone trading the dollar long. Not such a good week, not such a good week for anyone in stocks, which I'm laughing, but my accounts, 90 odd percent in stocks at the moment, guys. Um, so I took a hit along with everyone else, but I'm quite hopeful for the rest of the year. I know we've had this quite sharp drawdown on the stock markets. I do think it's a correction. As often, it can be overcorrected. So I bought into the drawdown, guys. We'll see whether that was the right thing to do or not in 3 or 4 months' time. But in the meantime, it certainly refocused my thoughts on currency, because if you're 100% currency trader, you do not get affected by all of that, guys, because when you're trading currencies, you're getting in, you're getting out, you're using tight stop losses, and you're never really, shouldn't ever really be caught in anything that draws you 20, 30, 40% down, some things 50% down, guys. So, yeah, I'll be refocusing on currency markets. Last year, I lost way with them, basically because it was so much easier to make money on stocks over the last, well, I'll not say the last 18 months, because the last 3 or 4 months have been tough in the stock market. But prior to that, for at least a year, it was a lot easier to predict the stock markets than the currency markets, because it was a race to the bottom prior to that, after the pandemic shutdown of the economy. But now things are starting to move again, guys. You're starting to see a differentiation in monetary policy between different nations, and that gives our diversification. So what was the big deal last week? Well, we've been waiting to see when the Fed would become hawkish, when they would finally admit that the high inflation figures we've been seeing were not transitory. And that happened last week, guys. They hinted towards it the month before, and then last week they finally come out and were quite hawkish, guys. And obviously the stocks dropped like a stone after that, and the in fact, I tell you a lie, the stocks dropped like a stone before it, and they actually stabilize a little bit after the Fed's announcements. So what the Fed are basically looking at doing, they're going to continue to taper their bond buying, the money supply, and they're going to start to rate hikes, going to start to hike rates. Some people are calling 4 rate hikes for the year, but what the Fed basically said was, we will use the tools we have at our disposal according to the figures that we're seeing. So we'll see how that goes. The one little thing we need to keep an eye on for the rest of the year is if interest rates start to tumble, start to come back down to acceptable levels, around 2.5%, then you'll see the Fed easing back on the rate hikes. And there are a lot of people saying that could happen mid-year, 2, 3, 4 months, get out of the winter, get the pandemic behind us, and we could see that happening mid-year. Now, the other interesting thing is that the ECB, the European Central Bank, are sitting on their hands. They're letting the Fed do all the heavy lifting here, guys, and they're sitting, waiting and watching and doing very little. At some point, they're going to have to move, and yet again, the experts out there are kind of saying that could well be into the summer, around about the same time that I'm thinking the Fed might start to lighten up as inflation in the US starts to come under control. That may be the time when the Eurozone starts to taper and starts to, talk about rate hikes. So what would that do on the charts? Well, I can see this continuing up for a period over the next few months, in here. And at the same time, we start to see the ECB increasing their interest in putting up, in controlling inflation, etc., which would start to pull the graph back down again, guys. So I think we're going to have, I've got that in because it's 100. It's a marker, guys. It doesn't mean it's going to hit that. It doesn't mean it's not going to overshoot it, but it just gives us a general target to aim for. And then we'll have a transition period where the Fed are still hiking, but the Eurozone, still hiking, started to hike. And then eventually, as the Fed, starts to become a little bit more dovish, then you could see the euro and the other currencies start to pull the DXY down, guys. It's just a theory. But we start off with the theory, then we see how things go, and then, we trade accordingly. So it's kind of what I think will happen over the next 6 months. So for now, I see more upside to the dollar, but obviously this is on a daily time scale, guys. Obviously, you need corrections, you need pullbacks in order to, give you an end to trade it long. And you take this information, obviously, and you put it into the major pairs, and then you can see, which pairs are setting up, which ones are best left alone, guys. Now, another little thing I was looking at over the weekend on this is like to use this MACD as a kind of, what's the word I'm looking for? Well, obviously it's an indicator, but I'll just show you what I mean here, guys. Now, I know that that's not a 5-wave impulse from there to there. It looks more like a 3-wave. In fact, it's 3, 3, 3. Okay. But that's the bottom. Now, we did say from way back when we got to here, we said that the dollar would, or DXY, would either run flat or it would pull back. And when we got this, we kind of went and pulled this over from a couple of years ago and said, well, I think it'll go up like that. It's not going to go up in an impulse. It'll go up something like that, which is exactly what we got, guys. Now, remember, we're looking at the overall structure. We're not looking, for individual waves. So there you go. So when I look at this and we're looking at an end game for it, because obviously this structure will finish at some point, and we're probably, 3/4 of the way through it, if not 4/5. And we come down, we look at this. If we go a 1, 2, and from there to there a 3, and this, and this is a 4, in other words, this 4, that's a 3, sorry, a 2. So it's a 1, 2, 3, 4. We could well be in a 5th wave here, guys, which, could come up into there somewhere on the indicator, which could well put us over the next few weeks or months, a move long. Maybe it moves like that. Maybe it moves impulsively. We're not privy to that. The important thing is to determine the direction, and then from there, so I'm just trying to find this, and then from there, now, I didn't copy enough of that. Let's do this again. Now, I'm going to go back to the economic calendar, guys, but I've just got carried away with this at the moment. Let's just do something like that. I would not be surprised to see something like that as a last wave up, and then we get our transition period where it starts to run flat, and then the euro starts to kick in. And obviously we'll look at this on a weekly basis. I look at it on a daily basis, but we'll look at it on a weekly basis here. And as things happen, as announcements come out, as we see interest rates move, differentiation between, say, the Eurozone and the US zone, we'll start to get a little bit more information in here as to when this is going to happen, but I'm pretty sure this is what we're going to be looking at. And of course, when it comes down the other side, it's not necessarily going to come impulsively, guys. It could well just be the reverse of something like that. So for anyone that's new, this is what I'm good at. I don't mind saying that. I don't shout from the top of the trees. It's not my personality, guys. And, but if you've accidentally come across me, be reassured that that I'm good at this. Now, so what's the proof of that? Well, if you go back, when we got this from way back here, we call this, let's go to the 4 hours, see if we can still find that in 4 hours, guys. Now, any of you guys that know me, you can just skip through here on 5 minutes or so. We're looking for a fourth wave. That was our fourth wave, wasn't it? Then we got, oh, no. That's too soon. We're way back over here when we started talking about this. In here, guys. We called that, and that's what we got. I don't know if this will run. That's too long ago. No, guys, it won't run. But we got that exact. There was our initial target, and then we got the one further on down. If you go and look at that, so you're looking at the progress from there down to there. If we go and look at that again, so that's where we were, and we said it will drop. That will be our first target. We weren't sure at that time whether we were going to get a truncated fifth and then off it would go, but most of the time it pushes on down a little bit. So that's what we got, and obviously I explained it over there. So down it came. There was our first target, and then we got the extra bit down. From there, we kind of drew this. We went 1, 2, 3, 4, 5. We'll get some form of a pullback, and then we'll get the other side of it. Now, it turned out that pullback was a lot more complex than we had initially thought. This bit wasn't bad, guys. It was quite impulsive. And then we were looking for a nice pullback here, and then a nice other push up, and then we would start to come back down again. Now, as it turned out, and this is why we say that we've got to, when we're doing these projections, we've got a plan in our head that says this is where we're going, but how we get there often will not be. Yeah, sometimes we're lucky and it just turns out the way we would expect. But that leg down and that leg up turned into this. So that leg up wasn't a nice impulse. It was this long drawn out push up. We hit our target, which was about 100. And where we got our target from was after the initial leg up. I think it was there. We then took that and we pushed it on up, and there was our target. Actually, wasn't 100. That's our baseline 100. And look, we hit our target. Not before we got that massive move down on the pandemic, but we weren't to know we were going to get a pandemic, guys. Even if we take this out of the way, we weren't too far off that figure there. This is just a scribble in, guys. And then the next leg down that we'd been looking for, let's clean it up again so we don't get too confused with what's going on there. So remember, we were looking for, what to do? Oh, deleted it. We were looking for a 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5 back down, at least breaking that level, which what we were looking for. We didn't actually get that, but we did get our 5 wave down, guys, and there it is there, 1, 2, 3, 4, 5. Once we hit there, I went over and I copied that, and I said, listen, guys, we don't know, just as I'm saying now, we don't know 100% how this thing will look, but I can tell you what type of structure it's going to be. In other words, from back here when we hit that, I said the dollars were going to run flat. Now, it could either run flat by giving us a nice big flat like that, or it could pull back the way it has done. And after a week or so, we went and we copied this. from over here, and I said, I get the feeling that the dollar's going to run like this, which is what it did. Now it's a little bit steeper than initially forecast, but obviously through this year that we were, in this corrective structure, we changed our ideas week by week as we get more information, guys. But the trend was correct. If you get the trend right, guys, you're halfway to getting trading currencies right, guys. Get the trend right. So that's my projection. I'm going to leave it there. Obviously, we'll move it back and forward as we're looking and whatever. But that'll be my projection for the dollar over the next few months. It's not going to look exactly like that, guys. But we just copied that and put it forward and said it could well move something like that up towards the 100 area, and then we'll see what the ECB says. Now, if it turns out the ECB don't do what we expect, or the Fed continue to be even more hawkish than what the market expects, then obviously this could push on higher, guys. This is not this is just the baseline, and the dollar can spend as much time above that as below it, guys. But that's our baseline for the dollar. I don't expect it to get too much higher than that, but we'll keep an eye out. If you're interested in what I have to say about it, just check in once a week. The first 15-20 minutes is always going to be about the dollar. It's the most important currency from a trading point of view. Where could it get to? Well, I don't think it's going to get to there, but it could certainly get to there. Let's see, is there anything else? It's not going to get to here, guys, but, there is precedent for it being up there. So as I say, it can spend as much time on that side of this line as it can on the other side. We're not expecting it to go way up there, guys. Certainly it could approach it, and then we'll look for the ECB to strengthen up, and the other currencies that make up the DXY, guys. The pound, the yen, the Swiss franc, the Swedish krona, and the CAD. I think the CAD's in there. Can't remember off the top of my head, guys. Only been doing this for years, but can't remember. Okay. Right, so that's my thoughts on the dollar. Let's get down to the 1 hour time scale, and then talk about what happened last week or over the last few months, guys. Now, when we were in here, and we talk about this every week, or we have been since we had that impulse. When we got that impulse, we said, right, we're going to have to get some sort of drawdown. And I would have drawn it like that, because I usually do. Given that we were in a diagonal, we were looking for a fourth wave, and I usually draw them like that, because that's what I'm hopeful for. That always gives you a nice move up from this sort of area. Now, as it turned out, that's not what we got. We got a flat correction, as you can see. So we got to here, and then price ran flat. Now, there were other commentators that called that as the end of the flat, and from there it was going long. I didn't agree, purely and simply because for me that didn't really break that bottom. Now, they were looking at maybe euro dollar, where did that break there? No, not really. For me, it didn't. And what you're looking for here is in a flat correction. Now, when you look at Elliott and you read the books, a flat correction will look like this, guys. You have your impulse. You'll get an A, B, C for an A, B, C for a B, and you'll get a 1, 2, 3, 4, 5 for a C. So that's an A, that's a B, that's the C, and then your flat correction will be over, and then you get your next leg up. That's the theory, guys. Very rarely will you ever see anything that looks exactly like that. But when you've been at it long enough, you'll know what you're looking at. That's a flat correction, guys. Price is running flat. So somewhere in here, you've got an A. It's back up for double bottom, or a double top, sorry, which is a B. And you could possibly draw, something like that in there for your A and your B. And then I was looking for a C. So the reason that I didn't think it was finished, two. Number one is it hadn't broken that bottom. And the second one was that this, and listen, that for me wasn't a completed wave. For me, that looked like a 1, 2, possibly a 3. You need a fourth and a fifth wave. So the whole way through here, I kept saying, when this breaks there, and not necessarily all the way down to there, guys, but when this breaks that, we'll start to talk about trading it long. And then you have your alarm line on there. And each day you adjust it according to what's happened. So it obviously gets steeper and steeper as you drop. So once this dropped at this point, that's where everyone was panicking here, because that was so impulsive. And if you go and you look where are people trading, what's the sentiment, I guarantee you 80 or 90% of people would have been trading this euro dollar long. I shorted it there, guys. Why? Because we had our C wave. That's our C wave. Now, it dropped deeper than I expected it to, but nonetheless, that was our C wave. And then you were going to get your next impulse up. Now, this is possibly a 1, 2, 3, 4, fifth wave. But I'm expecting more to this. So, that's why I'm kind of saying, well, it could end up then running something like that, because you often get that sort of run. If you go and look at Aussie New Zealand, there's that sort of run I'm talking about, where you get an impulse and then it just goes and goes and goes and goes and goes. And you often see it with this pair. Yet again here, you get that impulse and then it continued to run there. Here, you see it running there, guys, look at that. You often get it with this. There's an impulse and then just gradually makes its way up. It's not nice and impulsive. It's not, sharp. It's just back and forward and back, and it can be quite frustrating to trade it. But nonetheless, that's how I see the dollar index moving. Can I be wrong? Of course I can be wrong, folks. So just my thoughts on it, that it'll run something like that. Now, that's obviously exaggerated now, because we're on that's a daily time scale and we're on the 1 hour time scale. Okay, so that's enough about the dollar. What I expect this week, well, I'm looking for a bit of a drawdown. Maybe it'll push up a little bit more. But you're now looking, because you've had this impulse, like that one there, you're now looking for a bit of a settled period, something to pull back. And we get a pullback, then we'll start to look to see if it starts to do, that sort of business there, then it's just a case of getting into it and holding on for a long time. So you got to watch your leverage, because it's going to cost you money to be in it that length of time, guys. Obviously, what you can do is you can go and look for something else that's moving sharply south, short, and that'll give you a bit of an impulse so far as the dollar is concerned. But before we get into that, let's just quickly look at the economic calendar for the week, guys. Today, growth rate, GDP, Eurozone. Italy seems to be a lot of talk about Italy at the minute because of their presidential elections. Germany, inflation rate. So a lot of information coming out of the Eurozone today. We'll then go to the next 7 days. So 1st of February will be tomorrow. Australia interest rate decision. I'm reasonably bullish on the Aussie, particularly against the New Zealand, but we'll look at the chart in a minute. And then French inflation, unemployment, Germany, market manufacturing PMI and ISM PMI, manufacturing PMI US. Now, a lot of this information will determine, how the Fed are going to act. And the market will be predicting how the Fed are going to act according to what those figures are. So it's going to be interesting, finally, because the last couple of years haven't been very interesting in the currency markets, guys, but it's going to be interesting what happens over the next 6 months at least, guys. And then we've got February 2nd, RBA chart pack. Not entirely sure what that means, guys. Core inflation rate, Eurozone, and Italian inflation rate. Oh, yeah, again. Oh, yeah. French. Yeah, GDP, sorry. So inflation rate then. Bank of Interest rate decision. Bank of England interest rate decision. Now, the pound's one of those that I'm a bit undecided about, guys. The Bank of England have already started to hike their rates. It looks like they're going to continue to hike their rates, but there's also negativity around the British economy because nobody's really sure how it's going to be affected by Brexit. Because just as we got Brexit, on the cards, we got COVID a month or two later, guys, and then bang, Brexit didn't matter anymore. Maybe now Brexit does start to matter again. So the UK isn't as favourable for investment as what it may have been. So, yes, they're hiking interest rates. Therefore, the pound should go long, but I'd be very choosy about what I try and trade it long against, guys. And we'll look at the charts in a moment. ECB interest rate decision, they're not going to increase, but yet again, we'll listen to what they say to try and time when they are going to start to move. ECB press conference and non-manufacturing PMI United States. The big thing we're really looking for in the United States is non-farm payrolls, obviously, and the inflation rate. Okay. And, sorry, that's my broker. Let me pause you. Okay, folks, sorry for that. Forgotten where we were. Did I draw that in or what? What did I do to that? Okay. Let's zoom in a little bit on this. So I'm going to have to pick it up again, guys. I've forgotten what I was saying. But basically, when we got into here with the euro dollar going long, I shorted it, traded it down. When we get into this spot here, I closed the trade, and off we went again. And on Friday, there we went, guys. So what's next? Well, I expect this to continue to drop. Obviously, in here we could have a bit more of a corrective phase. You could possibly trade it short from here, knowing well that it may well pull back a bit deeper before it goes. The problem waiting for it to pull back deeper is that if it goes from there, you're going to miss the trade. But if it does pull back from here, guys, and you've traded short from there, just hold your breath, let it run back, or you could kind of put a half trade on there, and if it gets further up, put a second trade on there. But we are expecting that to push further down. As far as the pound's concerned, the pound's a little bit more tricky than that because of what we're expecting. This was our alarm line from the other day. I'll take that off because that's more or less done. When we got to there, we said it would drop, and it did. What next for it? Well, if the pound's going to strengthen, then this wouldn't be the best trade to be in, guys, because it may well start to run flat. Now, that doesn't mean that it can't go short, but it'll not be as good a trade as the euro, guys. So I would leave that one alone. Aussie, quite a nice, well, obviously that's what we were expecting. And we had this alarm initially there, probably was there, and then there, and then there. And, so we've got that move. We've come in here. I wouldn't say it's a double bottom, guys. But I would expect it to continue to drop against the dollar. But yet again, just be careful in here because we would be looking for some sort of flat correction or maybe even a zigzag back up in here, guys, before we get our next move. You have to wait for the things to set up, folks. Yet again, and we called this the last few weeks. We're looking for a pullback, and then we said, listen, this will drop, at least come to a double bottom and possibly push on down. Of course, it did push on down. What are we looking for now? Well, yet again, we're looking for a correction on the dollar, and it will take whatever form it does, guys. Wait for it to happen, and then that'll be your next trade. CAD, little bit more tricky, guys. Reason being that the oil price is still very strong, despite the fact that the dollar strengthened up. Look where the oil price is. And the oil price it affects obviously the dollar, but it affects the CAD more than the dollar. And therefore the high CAD price, or the high oil price, will affect how impulsive this is. Remembering that if you take this move and you compare it with the euro, I mean, look at the difference, guys. There's there's the bottom. It's broken. The pound, a little bit like the CAD, because it's been a little bit stronger, hasn't broken that bottom. The Aussie has just about broken the bottom. The euro was the best trade, guys, and possibly the Swedish krona, but we'll look at it in a moment. So that CAD, a little bit like with the pound, not as favourable to trade long. The euro dollar for me is the one to be really focusing on. Euro Swiss, dollar Swiss almost come up to a double top there. Obviously, the gold price has dropped because the dollar's got stronger, so it hasn't helped there. But that was still a nice impulsive move. From down here, we said, listen, this is going to go back up to the top or towards the top. Has done. So that's the trade, guys. We're going to have to wait for the next trade. That's the period we're going back in, and you do have to be patient with these things. So we're going into our next phase. Can it shoot on up? Possibly, but I'd be more likely to see some sort of correction here, or maybe even a move like that. But nothing to write home about. Always leads the way, doesn't it? Always leads the way. Swedish krona. Look at the impulse. All along here, guys, waiting for the break of the flat, and then you get your impulse. That's exactly what we said would happen. I love it when a plan comes together, because we often spend a long time waiting for these things to set up. Now, I've put that like that. It shouldn't really, because we're looking for a correction on here, guys. That's a really nice impulse. Wouldn't be surprised if we got a bit of a pullback before we get our next move up. The yen, yet again, hasn't broken the double top yet. The double top hasn't broken the new high. But look at how it's moving, guys. Don't know if we can pull it back to there or not. Yeah, we can. We can get away with that. It's running up in this channel. It's come back to the bottom. It's moving in that direction. We did say from here that it would break out and move. The one downside we had to this was we were concerned that with a drawdown in the markets that you could get money moving into safe havens, which the dollar's one of them, of course. And therefore that move wouldn't be as strong as the euro move, guys. And yet again, that move very similar to the CAD, very similar to the pound. The big move was on the euro and on the Swedish krona. Gold, unfortunately, back down again, guys, impulsively as the dollar it went up impulsively. This dropped. It'll probably stabilize around here. Don't see it really dropping much from here, guys. Very turbulent this year. The markets will be turbulent this year, and gold it'll hold its value, but I don't see any major upside to it unless inflation gets right out of control, guys, and then you'll see people moving into gold. So it's a hedge, but don't expect any great things with it. Silver came back down much deeper than I expected. I was looking for a bit of a push up here as the markets dropped, guys, but that move in the dollars pulled it right down. Yet again, it'll run flat through here, potentially back up there. I'm already in it, guys. To be honest, I'm just trying to get out of it. It hasn't done me much harm, but it hasn't done me much good in the in the last. From where did I get involved? Way over here. I traded that up, guys. Let me just see if I'm right here. Yeah, I traded that up and then got involved again. Yeah, almost a year ago, guys, and I've just been stuck in it. And I don't know. I don't think I got involved there. Probably in here somewhere. And I'm just looking for a nice little move up just to get out of it. Bitcoin. Now, if you believe in Bitcoin, guys, Bitcoin should break that top at some point. Whether it's going to make this move or not, yet again, I've got this in as running in a diagonal after all the impulses that we draw down, and now it's kind of running like that. Impulse, pull back, push up, pull back, push up. So in other words, it's going up, but it's not going, and then eventually someday it'll break out. So this could be a running flat, guys. Now, I don't know that that's what it is. It's just something that's running around my head. There are people calling for this to drop further. This is where I drew it, guys, when we were here. I did something like that and kept saying when we were way up there, I kept saying, if it gets down to there, I'll be interested in it. Now, I bought into it. I made a little bit of money, I got out. I bought into it again, I made a little bit of money, I got out. I'm a little bit unsure of it. The reason I'm jumping in and out of it is because I'm in an awful lot of other cryptos and putting the extra money into Bitcoins just it's making that investment too heavy for the too high a percentage for the account. I would rather trade this. The plan was to trade cryptos in, say, Coinbase and leave my eToro account alone because it really skews everything either to the upside or the downside, guys. Upside's not as bad, but it does, skew your normal day to day trading because it's very, very volatile, guys. So we'll have to see where it goes. I suspect we could well see a move like that. Obviously, listen, I've copied this from over here. It's not going to be exactly that, guys. But a move back up to there. Maybe it breaks the top before it comes off again. Over the next, what's that? Into the summer anyway, guys. That's April, May, June. May well do something like that. Of course, it could be more downside to it before it does that. But I do think there'll be another leg up in it. Ethereum. And that will follow Bitcoin, guys. So if Bitcoin moves up like that, it will move up like that. And if Bitcoin does that before it goes long, then Ethereum will do the same thing. Oil. Oil is just continuing to push up. As we said, we did say in around here it would run flat. I thought it would run flat for a little while up around there. But the one thing we did say is, listen, it's definitely not going short. So it will either run flat or it will continue to push up. Now, from here, will it push up? Well, it could possibly, but I wouldn't be buying it there. I don't buy oil anyway, guys, but I wouldn't be buying it there. If it came off again, look at buying it there. But there's a lot more to oil than just the chart, guys. If you know a lot more about oil, then trade it. If you don't, leave it alone. EuroCAD probably continue to drop. So if you see a nice setup here, maybe you trade it down. Euros, I'm also looking for that to drop. I'm being a little bit glib, guys. The dollar's the thing to trade. The US dollar's the thing to trade. But every now and again, you'll see a nice setup in one of these. But don't get too caught up in them. Euro New Zealand, yeah, I would say that would be the direction I'd be looking to trade that if I were going to trade it. Euro yen. See, there could be, it could be a period of consolidation like that first before you get the next move up, guys. Euro Swiss. Oh, it started to move. Now, yet again, we had that impulsive move. Do you remember when we were in here and just said, leave it alone, leave it alone? The reason I said leave it alone is because you don't know how far that's going to run, guys. And at some point, it's going to, that move will break and it will go. So the whole way down here, we've been saying, let's look for the breakout, look for the breakout. Well, we got one last week, guys, or the week before. And then it was a case of, well, now we're looking for a setup to trade it long. Well, we got a setup, but it actually came down, broke the bottom there, guys, and then started to push up again. Now, that push up there, I wonder, is that, the gold price dropping that's caused that? See that? But it does look ready to at least push back up to there, guys, and maybe a bit beyond it. Am I going to trade that? No, I'm not. I've become very selective of the trades I take on currency, guys. I used to trade every day, jumping in and out of things. I did it for 3 or 4 years, and I ended up breaking even. And that's not what we're here for. So now I'm a lot more selective and looking for something that's really going to go. Pound CAD, another tricky one, guys. Possibly a bit of upside to this, but not a lot. So I'm not even going to put an arrow on it because the CAD, we're looking for it to strengthen. If you're looking for the pound to strengthen, so you end up running flat in here somewhere, guys. Can it do that? Well, possibly it can do that. If the oil price were to come off and the Bank of England raised interest rates, you could well get a move up. But that's all ifs and buts, guys. I don't know enough about that to want to trade it. There's a nice move up in the pound. There was a nice move there. Come back down awful sharply. It's been long and slow and a bit of a grind. It's the 4 hour we're on. It's come back down. Over here, we said it would run flat. If the Bank of England call interest rates hike rates later in the week, then you could see a bit of a move up in the pound. Not that keen on it. Pound New Zealand, same thing, guys. That's the trend at the minute. I've put in that it could run flat. We'll see. Nothing much there. There isn't a setup at the minute anyway, so guys, so don't be worrying too much about it. Pound Swiss. Well, we called that one nicely, didn't we, guys? Yet again, it's gone. You can't jump into it. You've got to wait for the next setup. I did put a question mark, by the way. We can take a question mark off because it happened. Pound euro. It's in this diagonal, guys. I can't see it doing that, but I'd be a lot happier trying to trade it long from down here somewhere than trying to jump in there in that little double top. If the Bank of England hikes rates this week, it could possibly push up. The thing with interest rate hikes is, guys, they're probably already priced in. So unless in this case, the Bank of England say something different to what the market's expecting, then you don't necessarily get a boost on it when the interest rate's hiked because it's already priced in. But if they say with hike rates, we're going to look at hiking it again, or we're going to keep an eye on things, and the market thinks inflation is going to stay strong, they'll say, hey, they're going to hike again, and then the price of the pound will move long, guys. But it won't move long based on the interest rate hike that we're expecting. Now, if the Bank of England turned around and didn't hike, you would see the pound drop like a stone. But we're not expecting that. We're not expecting that. So I don't really have a lot of belief that the pound is going to move long on the interest rate hike. But depending on what they say after it, may well, just as the Fed the other day didn't hike rates, but they said they're going to, in so many words, that's what moved the dollar, not an interest rate hike, guys. Okay, the market's always tries to get ahead of the game, guys. They don't wait for the thing to happen. Now, I can remember when I first started currency trading, you know, betting on interest rate hikes, and the price would go in the opposite direction and I'd lose money. And back then, probably using too high a leverage. This is a dead cert. Stick half your money on it with a 20 times leverage. And of course, the interest rate hike comes out, but it's not as much as what they expected, or it's already priced in and everybody takes their profits. And when you're expecting it to do that, it actually does that. And of course, when you're trading too tight, with too high a leverage, with too much money in your position size, or too high a position size, then you get really knocked. Then you start gambling, guys. Don't trade like that. Be conservative. Get little bites at a time. Get it right more often than you get it wrong, and you'll gradually increase the amount of money in your account. Pound yen. Well, this is one that possibly could push on up. Aussie yen. Another one that would look to push up. Going back to the yen index. Listen, it could stall out here and run flat, guys, but just based on the structure prior to it, another little running flat possibly. So I'm looking for another move like that down into here, and then we'll think again about what's happening with the yen. But that's what I'm looking for. So it doesn't necessarily definitely have to happen, but it's something that you could think about, keep an eye out for. And you start to see the Aussie moving long, potentially there's a trade in there. Aussie, New Zealand, well, from way back here, I called it long. I did say, listen, it's going to run like that, which is what I mean by what's going on there. I get into it, and then it dropped, and I got back to zero, and I let it stop out. Didn't get involved in it again, guys. I need to be a little bit more patient. As I say, I haven't really been focusing on currency trading this last year or so because of what was happening in the stock markets. But next currency trade I put on, I'm going to be a little bit more patient with it. I think this will continue to go up, guys. Called it long from way back here because this had dipped so much. And then that was a bit of a bit difficult to trade through, because we're saying, well, have I got this wrong? Is this going to keep dropping? But the thing about the Aussie New Zealand is it fluctuates. It runs like this, guys. It comes up. Well, it has for the last 5 or 6 years, guys. And then it drops off again. Then it goes up, and then it drops off, and then it goes up, and then it drops off over a year down, a year up, a year type thing. And if you go and you look at it on a daily basis, you'll see it. From a way back, long time, guys. From about here, when was that? 2015. So the last 7 years, guys, it's just been running, like this. So recently it came back down for me here. And it come back down into that zone where it usually turns and starts to go. So I started saying, let's look to trade this long. But I was a little bit concerned with this, because I thought, well, are we going to get one more down, maybe into there? But that was when was that? Yeah, that was March 2020. That was the big sell-off, guys. So you don't get those very often. And that's certainly not the situation we're in now. We had one way back in 2015. So for me, this has started the next move up. The one little concern I have with this is it going to bump up against there before it comes off again? Now, at some point, I'd like to see the Aussie going to there. Obviously, we'd have to have the fundamental reason for that to happen. Get back into here. I'm sure it's been higher than that in the past. Let's just take that off, because I don't want to come back next week and have people saying, hey, you got that wrong. This is a daily time scale, guys. So from here, I would say there's more upside, but obviously you got to be careful, and you go back down to, you got to be patient as well with it. And you go back down to the 4-hour time scale, You can see how it's moving, guys. Little impulse there, a bit of an impulse there. That's nowhere to get involved. That's nowhere to get involved. Can it go up and break? It can do, but it's more likely that it's going to do something like this. So it could do something like that, drop again. So if it came back down into there, whether it comes sharply or whether it goes there and then gradually comes back down, then at that sort of level I might be interested. But it's not going to, you're not going to beat the bank. Well, beat the bank. It's easy to beat the bank these days, but it's not going to be fireworks. And then you need to be careful of your leverage, guys, because obviously you pay for your rollover fees on your leverage. So if you're stuck in it for too long, it starts to become a bit of a pain. Aussie Swiss, now that's better. That's what we're looking for. But yet again, it's happened, guys. It could push on up if you're already in it. Put your stop to zero if you believe it's going to continue to go, but it could well pull back down again. But before we get a next move, Aussie CAD, we'll just run through these quickly. I don't like trading this one, guys, because I don't have a handle on it. Swiss yen, I'm looking for this to go long again. Yet again, it moves like that. It's been moving like that recently. So it's dropping. I'll wait. Now, the only thing I do have concern about this is the yen is actually dropping at the minute, and this is dropping as well. So, but I did draw this in a while back. I said, well, if it gets down into there, I'd be keen to try and trade it out. Other than that, you're looking for an impulsive break of that structure. And of course, you could always say a 1, 2, 3, maybe a 4, 5 gets down to there and then it goes. But there's nothing there for me at the minute. CAD Swiss, my old pal, it's running flat at the minute, guys. Certainly looks like eventually it's going to break out. It looks like I was looking for a little bit more downside. You see, the reason for that was the expectation that you'd get a move to safety with the stock market drawing down, guys. But you've just seen the gold price has actually come off, and there hasn't been a big move into safety. There's been a rotation from growth stocks into safer, blue chip value stocks, dividend stocks, bonds, that type of thing. But there hasn't been a rush to safety into cash, guys. So this is possibly got an upside too. I wouldn't like to jump in there though. CAD yen. Yeah, it's moving the direction we were looking for. From way back there, guys, when the alarm was there, it kind of went like that. We drew that. In other words, we're looking for a breakout, looking for a setup, and then off it goes. So we had a breakout. It wasn't a beautiful breakout. We've had a flat correction in there. This will probably push on up. CAD against the yen, guys. New Zealand, I'd also look for that to push up against the yen. New Zealand CAD, just like the Aussie CAD, guys, not 100% sure of it. I know all along here I've been saying, well, it's broken, it's pulled back, let's look for a breakout, but you'd need to see the oil price dropping a little bit for that to happen. So we're looking over the next lot of months, if inflation starts to tail off, get out of the winter, demand for oil starts to drop, then you could start to see a move up in this. Can it happen in the meantime? Well, potentially, but, I'm not going to try and trade it. Listen, ideally, if it broke out like that and gave you a setup, you'd start to trade that up. I'd wait for the breakout first. New Zealand Swiss. It's come a long way down, guys. Maybe it's time for it to start to push back up again. Look at the size of that draw down there. I wish I'd have been trading that, but I wasn't. So potentially the next move is up. But yet again, maybe this is a little transition period. You're going to look for it to break out at some point, and then we can maybe start to trade it back. That'll be your first target, and maybe it pushes on up. But that's speculation at the minute. let's keep our eye on it, guys. Okay, that'll do for this week, guys. Sorry, these are a bit long drawn out, but it's the way I like to do them. And I'll keep promising I will start to do charts on TradingView, which will give us reference points along the way as this develops, guys. Okay, bye for now.